Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at a W3 or Wave 3 trade setup that's just unfolded on a 3-minute chart of the ES. But as usual, we start with our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. It doesn't matter what trading approach you take, there always will be losing trades. Right, this is a 3-minute chart of the ES. I'm using, if I look at the data series, I'm using the 24/7 template in NinjaTrader, i.e. the 24-hour template. And here we have a W3 trade setup unfolded here. So I'd like to just take a look at that. For those of you who are new to looking at MTPredictor, we don't take all our setups. We have automatic setups on our charts. We don't take these all blindly as if it was a 100% mechanical trading system. We don't do that because we understand that markets are random about half the time. In other words, just over half the time, there's no clear discernible pattern. So of course the question arises, how do we then determine when the pattern's clear? Well, for this we go to a higher time frame chart. So if you're looking at a 3-minute chart, you go out to the 15-minute. If you're, say, looking at a daily chart, you go out to the weekly. If you're, say, looking at Forex or maybe an hourly chart, you go out to the 4-hourly chart. So what do we do? Well, if I just drag the chart off to the right here a bit, what we do is we place DPs on our higher time frame chart. These are leading indicators that are on the chart there in advance. Let me show you what I mean on this ES chart. You can see here's the most recent main pivot high back here. That's higher than that one. So you'd go back to that pivot, you'd right mouse click, you do decision point. I'm just going to use the typical, and can you see how it's on the chart there in advance? Now that gives you an area of potential resistance. It's there before the market even gets there. So it's preparing you in advance for a potential support and resistance in this case. What we look to happen is then to see what the market does if it gets to that level. We're not projecting that it will get to that level. We're saying that if it gets to that level, then that's an area where we anticipate a reversal may unfold, so we look to see what the market does at that particular time. So for this, we then come down to our shorter time frame, i.e. the time frame we're trading on. So can you see here how the market did indeed make a reversal at this level? It came up to the level, backed off a bit, came up again, peeked through it ever so slightly, but it did actually then back off and find resistance at that level. So at that point is where we start our Elliott wave count. In other words, we draw the line in the sand there. This is my unique isolation approach to Elliott wave. So we start our count there. So what do we look for? Well, the initial decline down into here, we consider that being wave 1. We're then looking for a wave 2 correction that normally unfolds in an ABC pattern. You can see that here, A, B, C. That then defines our W3 or wave 3 trade setup. Our MTB trend had gone from grey to show you in the process of making a reversal to red to show the large degree trend was down. So here, can you see how the picture was clear? We're coming off a higher time frame DP resistance. We had a lovely clear clean pattern. Our MTP trend was confirming that, therefore this was a good trade to take. Can you see that we had our sell set up here, but if you look a couple of bars earlier, can you see this was a history triangle? A history triangle shows that this would have been a setup at the time. Now the only reason this printed a history triangle is because we actually made a double top. So this is one of those rare circumstances where you can have a history triangle that actually was a profitable trade. Because if I right mouse click over this red cell bar here to analyze trade setup, this gives us our entry level, our position sizing. Remember, we are risking 2% of a sample $20,000 account. Obviously you can change the size account you wish as well, therefore that's on a $10,000 account, or if you're trading a $5,000 account, you can change the size you wish there as well. But we are using a sample $20,000 account risking 2%. So that gives you the entry level, it gives you the number of contracts, and it also gives you the stop level. Now when the market went up and gave a double top, I just want to show you this, you'd have actually been entered into a short trade there, but you were never stopped out because the stop trigger was at 40.25. But if I hover over this bar here, can you see how the high, if you look over here, was 40? Do you see that? It was 41.40, so you're never actually stopped out. So you would have been taken into a short trade, almost stopped out but not quite. The market then started to decline. For a wave 3 trade, what we're anticipating that we are going to get a wave 3 swing. Therefore our target is the typical wave 3 WPT. This is the Fibonacci cluster where typically wave 3s are likely to end. And as you can see, this is exactly what the market did. It went down to this level, is now starting to retrace back again. So this would be an ideal place to have taken profits. But the beauty of the W3 or wave 3 trade setup, and the reason why it's one of my favorite trade setups in MTPredictor, is because you're catching the end of the wave 2, you're then looking to trade the wave 3. The wave 3 is normally the strongest and longest in a completed 5-wave sequence, therefore has the largest profit potential in relation to the smallest initial risk. In other words, it has a good R value, and as you can see here, the profit down here at this profit target would have been approximately 15 times the initial risk. In other words, when the market came down here, for an initial risk of $375 ignoring slippage and commission, the profit would have been just over 5,800. In other words, just over 15 times greater than the initial risk to take this trade. Remember, we don't assume that all trades are profitable. Of course they're not. Any professional trader will know and tell you that that's complete rubbish. There always will be losing trades. But why we like this is when the losses come through, the losses are kept small at -1R or 1 risk unit. But what we're looking for in these W3 trade setups is to have large profits, not just in dollars, but in risk reward units. And as you can see, that's exactly what has just unfolded on this trade setup here. So hopefully this is a good example of our MTPredictor W3 or wave 3 trade setup that's just unfolded on a 3-minute chart of the ES. By the way, just to remind you that this is NinjaTrader 8 here, and these are our MTPredictor add-ons for NinjaTrader 8. So I hope you've all enjoyed seeing our W3 or wave 3 trade setup on a great example that's just unfolded on a 3-minute chart of the ES. As a PS to the video, although this was in our add-ons for NinjaTrader 8, exactly the same setup came in on our standalone version. This is our MTPredictor 8 standalone version. You can see exactly the same setup there, as well as our add-ons for TradingView. If I just drag that into the chart there, you can see here's our add-ons for TradingView, and there's our exactly the same setup there on that history triangle there as well. So if you're using our TradingView, you can use our MTPredictor scripts for TradingView, or you can use our standalone version, which is exactly the same version there, or if you're a NinjaTrader user, there's the same setup in our NinjaTrader add-ons as well.